Here is a very encouraging stat. The top 8 best performing new ETFs last year in 2024 were all crypto related, every single one of them. And that's out of quite a few, 740 new ETFs, specifically in 2024. And so that's a pretty good indicator. That is solid performance. It's empirically validating, and it really does establish crypto as a legitimate asset class. Wall Street is also waking up to this news. As an observation, really, it's unavoidable. And Bitwise also pointed out another pretty interesting statistic, namely, quote, 56% of financial advisors are now inclined to allocate funds to crypto. So a majority, 56%. That certainly wasn't always the case. This is only the beginning right now because recently we've seen new filings for Cardano ADA and Solana SOL ETFs. And a lot of people feel it's only a matter of time until they are approved, until these financial instruments become legitimate, become more and more mainstream. So let's take a look at which one we expect between Cardano and Solana to get approved first. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. I wish you all the best of luck if you choose to invest, whether you're involved directly in these cryptos, these altcoins, right? Cardano, Solana, others, or maybe you're hoping for their ETFs. Whatever the case may be, I wish you very, very well. Just remember that I'm not a financial or investment advisor, and therefore by extension, this video is not official financial or investment advice. So spot ETFs are just investment vehicles, right? A crypto ETF like Bitcoin or Ethereum spot ETFs, these are tools that expose you to these assets without you having to hold on to them directly. You don't have that same set of custodian responsibilities. And the spot ETF follows the price movements of the underlying asset, obviously very closely. But like I said, your exposure to Bitcoin in this example, or any other asset with an ETF, is indirect. That is because you do not actually hold the underlying asset. Same would be true with gold, for example. Your broker that you use holds the actual asset. And so in this case, if you buy into a BTC spot ETF, for example, you only own a share that you buy on the stock market. But the broker needs to back each share with actual Bitcoin, of course. Now, this means, of course, that you don't have to own a crypto wallet, and you also don't need to use crypto exchanges to buy a crypto asset. Again, the broker holds this in their respective and hopefully secured crypto wallets that they maintain. That just means you don't have to deal with the, at times, complex crypto ecosystem. And that's actually a good thing for kind of arm's length investors, people that don't want direct exposure. They don't want to be in the weeds of cryptocurrency, but they still want to have access to some of the gains. They want to have exposure to the upside, but without dealing with some of the technical things, hot wallets, cold wallets. It's not for everybody, admittedly. And so especially for investors that are pretty well seasoned, but maybe new to crypto, this can be a pretty good option because, of course, it represents convenience. And that's a big reason for the success of these ETFs as we've observed so far. This whole model bases itself on the traditional finance world and its investment structures. It's also regulated, of course, since the SEC, the Securities and Exchange Commission, needs to approve an ETF. Every new ETF needs to be approved by the SEC, in fact. And this appeals to both retail and institutions. But of course, there are some disadvantages. For example, you are still exposed to asset volatility. The custodian is still at risk for things like cyber theft. They're not immune. And so you got to make sure they're using their best practices, by the way. In case the asset hands out rewards, they go to the broker, not to the ETF shareholders. Again, it's indirect exposure. Currently, there are only 2 crypto spot ETFs, those being Bitcoin and Ethereum. And as it turns out, the launch of the BTC spot ETF is actually the most successful spot ETF launch ever, as far as every metric indicates. On January 10th, 2024, the SEC approved the Bitcoin spot ETFs. That was a little bit over a year ago. However, a year later, it had $107 billion in AUM, assets under management. No other new ETF achieved this kind of volume in that same span of time. In the US, there are 11 providers for Bitcoin spot ETFs. BlackRock unquestionably is the leader right now. Its IBIT fund, just on its own alone, holds $57 billion in Bitcoin. So yes, the Bitcoin Spot ETF has been very successful. In fact, it's broken all the records. That is also reflected in this chart here, where you can see that the inflows, at least on most days, outperform the outflows. On the other hand, we have the Ethereum Spot ETFs that are not as successful. There are 9 providers in the United States. They were approved on the 23rd of July, 2024. However, they have not really seen the same demand at all as the Bitcoin ETFs. But the fact still remains that there is an Ethereum Spot ETF, and that's positive. In 2025, we have some experts that have analyzed the situation. They're actually calling for a $150 billion inflow into the BTC ETF alone. That benefits Ethereum and the entire market kind of indirectly. And there should also be plenty of new ETFs along the way as well. Let's get now to the 2 most likely contenders who are at the top of that list. This spotlight video is sponsored by Walrus Protocol, which has the fastest solution for data storage on the market today. And of course, it's from the team behind Sui. And it's a potential Filecoin killer because it does, quite frankly, a lot of things that Filecoin cannot. One thing is that it's so resilient that even with only a few nodes operating, your data availability won't be affected. Decentralized data storage on Walrus is solving a pretty big problem that many blockchains suffer from. That's poor coordination, and it affects you more than you may realize. Walrus Protocol has some pretty big advantages with Sui and the Move programming language over other decentralized data providers. The problem, as they see it, is coordination. That's making sure if a protocol does 3 things, that those things work seamlessly with each other. Also, the protocol needs to work with other projects in the ecosystem and with the blockchain infrastructure, like validators. Listen to Sui co-founder here, Adeneyin Abiodun, describe the problem and how Walrus is part of the solution.
The best platform for you to use to solve your coordination problem, because it comes with a lot of features that you already need out of the box, is Sui. And that's not just because, you can write a smart contract and it does stuff. That's one thing, of course, right? But also if we take the example, let's say again, of Walrus, even the things that are not in Sui, right? Let's say the storage nodes that are separate from Sui, they still need to coordinate with each other. And our best bet, we believe, is to coordinate through Sui, right? To say, well, look, okay, we're all going to be reading and writing state from Sui, doing transactions, reading state, expressing things as resources when it makes sense, and that drives effectively that off-chain infrastructure.
Right now, Walrus is finishing up its testnet. The mainnet and the WAL token launch are coming soon. If you want to stay updated on the latest testnet progress and other news, make sure to follow Walrus Protocol's X account and all the other appropriate socials. So the SEC has confirmed 4 filings for a Solana Spot ETF. That came just yesterday. And the filings were from Canary, VanEck, Bitwise Invest, and 21 Shares. So some pretty big and familiar names. We also need to consider the current change of key staff and really leadership at the SEC. Paul Atkins, of course, is going to be the new SEC chair. He's pro-crypto, generally speaking. So 4 filings, and the fact that he's going to be coming in very soon, that's big news collectively. By the way, we do have a great offer here that's worth mentioning, because if you're looking for a place to buy Solana, the SOL token, or a lot of other altcoins, honestly, check out BuyDeFi. It is the place to be for you, and you can take advantage of this offer here. More info in the description below. Now, the Winklevoss twins filed the first ever crypto ETF for Bitcoin back in 2013. They were major trailblazers in that sense. They weren't successful, but that got the conversation going, and it certainly helped things out. So kudos to them. Fast forward now, 12 years later, and we have 4 brand new Solana ETFs under 19B4 filings. That's the very first step in the application process. The SEC now has a 45 window to either approve the filing or to deny it. However, in total, the SEC can extend things and grant up to 240 days from now. And with those changes in the top SEC brass that I mentioned, I would expect a fairly swift approval. And if we take a look at Polymarket, which is the prediction site that sources the wisdom of the crowd, they have a Solana ETF approval at some point in 2025 at an 84% chance as I record. I would say the odds look good. That's not necessarily those in the know that are voting. It's kind of the consensus, but certainly It seems to be more likely than not. Let me know your thoughts about this, not only in the comments below, but join us on our socials, on Discord, also on X. When it comes to Cardano and an ADA spot ETF, as you may or may not know, Grayscale filed for this officially, or to be more precise, New York Stock Exchange ARCA filed on behalf of Grayscale. And of course, Grayscale already has all kinds of various crypto trusts, among others, Solana, but they also have one for SWI, for Aave, for XRP, and many more. 27 in total here, as you can see. Grayscale already offers Bitcoin and Ethereum ETF products, and so it seems that they have full confidence in Cardano. And as a result, actually, ADA, the price of ADA, jumped 11% after this news came out. But whether you want to put a lot of stock in it or not, according to Polymarket, the wisdom of the crowd here only sees a 58% chance approval in 2025 for a Cardano spot ETF. Again, that's not definitive, but just collectively speaking, that wisdom of the crowd kind of sentiment, there's not as much confidence here in Cardano as opposed to Solana. So in terms of which project is going to be the first to achieve that coveted spot ETF approval status, it seems like an easy win for Solana in this case, kind of going by the numbers here. I'd say that's more likely right now, but don't underestimate the resilience of leadership, especially Charles Hoskinson, Cardano's co-founder. But unfortunately, just by the numbers here, Cardano just doesn't have as much confidence when it comes to people's belief in a spot ETF approval this year as other projects. Even Litecoin is further ahead. They're tied with Solana right now at an 84% chance. The bottom line is that most likely there's going to be plenty of new crypto spot ETFs. Even this year, I would say, that's a pretty high probability. But right now, the most likely to achieve that, not first, I guess number 3 status after Bitcoin, after Ethereum, is Solana. Solana is most likely taking the front seat here and getting the first approval in terms of that new round of approvals this year. In all fairness, though, I don't expect any of these new ETFs to do as well as the Bitcoin ETF. Broadly speaking, for the industry, the crypto space, it's a pretty good positive win. That's my perspective, and I think Solana is going to be first in all likelihood. I could be wrong, but there you go. Let me know your thoughts about this in the comments below. Other than the coins that we mentioned, so Solana, Cardano, we touched briefly on Litecoin. Let me know what other projects out there in the altcoin space deserve their own spot ETF.